To stay in the sort of the three larger currencies, I guess the euro, the dollar, and the yen, and to borrow from El Arian, the idea of the cleanest dirty shirt, right? Currencies are a relative game, obviously, and because we're all in this debt overhang period, what does that mean for the ability to continue down this road of deficit spending? And are we looking at debt monetization? Are we looking at NMT? Is this where we're headed in terms of policy directions? And what does that mean for this relative cleanest dirty shirt currency game?
Well, I think when it comes to debt, I might be a little bit of a closet MMTer. Not really an MMTer, but like a tiny bit of an MMT in the closet. Like I just don't think that sovereign debt is a big issue for countries which have not don't have like for debt in other currencies. So they don't have countries like US or Europe which don't really have especially Japan, which have no fear of balance of payments crisis. They can fund in their own currency. It's not as much of an issue. And an issue is kind of chickens come to roost is when you have inflation. And even the hardest core MMT people agree with this, but you have to deal with inflation. But to me, yes, but to me, they already won that game because you see, if you can issue the debt and then buy back 1/3 of it or half of it with the central bank, you kind of won the game because what happens next? If you have inflation problem, all you have to do is just sell your balance sheet and you can solve the inflation problem.
But who's buying your balance sheet unless you're resorting to capital controls and financial repression and forcing, I guess, insurance companies and reinsurance companies to own your government debt because it's the pristine collateral that they need to build their balance sheets with?
Well, it almost doesn't matter who is buying it because say you need to sell 100 billion 10-year notes and you might not sell them directly. It could be through runoff, right? But you just put them in the market and say like, okay, buy them. So maybe they'll buy them cheaper, but at some point they'll clear. Now, will rates rise? Well, no kidding. If we're fighting inflation, the rates will rise. If you're doing it for the purpose of fighting inflation, yes, the outcome of it, the yield could long-term or temporarily go up. Now, the history shows that this increasing supply doesn't actually cause yields to go up. But even if they did, it would be like, yes, Sherlock, we're fighting inflation, we tightened financial conditions, rates went up, right? So, but it actually not what even happens necessarily. Like if you look at supply of treasury bonds, it did not really correlate very strongly with interest rates historically, or if anything correlated negatively with interest rates.